This video is sponsored by Bityard. With over 400 cryptocurrencies to choose from on their spot exchange, dozens of USDT pairs for futures trading, perpetual coin futures, trade commodities like gold, silver and oil, Forex, and major indices like Nasdaq. You can buy crypto from Bityard with over 50 different fiat currencies, using Visa, MasterCard, Google or Apple Pay. If you like, you can use their copy trade facility, follow other traders who will execute trades on your behalf, or become a copy trader yourself. So if you want a bit of that, click the link in the description. Hello everybody, welcome back. Sorry for a bit of a late video. I've got family around here at the moment, so lots of kids, lots of screaming, lots of effectively tidying up to do. So unfortunately the channel comes as a close second at the moment to basically the rest of my life. It's going to be like this for a few days, and then obviously next week I've got the same problem again, but I'm in a different city, so I'll go off to see other members of the family. Honestly, holidays, what a pain in the absolute ass. But never mind, it's all very pleasant. But let's have a look at what's going on with price action today. So just quickly focus on Bitcoin. Effectively, what we're doing is this looks very much now like a clear local top for the moment, and coming down below all these moving averages on the daily. No big deal, guys. No big deal. Remember a while ago when I was saying let's take some chips off the table here. There's reasons to believe we're going to have a big dump. Lo and behold, big dump we had. The chips were taken off the table. Not all, but a sizable chunk. Those chips were brought back onto the table at 40,600 down here, and again at 35,000 down here. Those are the spot trades that have taken place for me. One in December, two this year. So far, working out quite well. This is basically all it is. I make these videos on a daily basis. You know, we try and speculate as to what's going on. Sometimes we look at altcoins, you know, and some of them work out, some perhaps don't work out, but that is the nature of the business. Now when you're looking at what's going on right now, I stick to what I believe, which this looks like an accumulation. That's normally what you'd get after a giant consolidation. So there's your consolidation, felt not just by Bitcoin but by traditional markets, and here's your consolidation end. Doesn't mean that it goes straight up. Lots of people like to trade these breakouts, and clearly were traded, but you know, lo and behold, resistance back down. Did we make a lower low? No, we didn't actually. Did we go back up? Yeah, we did. What did we hit? 200 exponential. Okay, lovely. Came back down. Did we make a lower low? No, we didn't actually. What then happened? Went up to the 200 simple moving average. What's that all about? That's a higher high, I suppose. And what are we doing now? Well, we're coming back down once again. Where are we going to go to? Are we going to make a lower low this time, or are we going to make higher lows? That's the main question. You could make the case that what we're looking at here is a diagonal trend line that could suggest that this is effectively a very small and weak uptrend in the form of an accumulation, which again is bullish. You could argue that this is a channel, and if that is a channel, then sometimes, most often actually, these channels break to the down. We were in a channel before for Bitcoin, and it actually broke out. That was a few weeks ago. We were in a small term channel similar to this, and we broke out. They're statistically more likely to break down, I should add, but they don't always have to. And that could be what we're looking at here. A channel with higher highs, higher lows, all in an accumulation, ready to break out. Now, get rid of that channel business. We don't need to see that anymore, but you get the picture. So we've got, as far as this, you know, what we're looking at here, this accumulation is what I'm calling it. It is higher highs and higher lows at the moment, and we could sustain sort of a higher low anywhere above these kind of lows here. So we're talking 37,000. There is a strong level of support, I should add, as we all know, around that $40,000 to $41,000 zone. There's been a fair bit of price action take place around there. We can have a look at that around here. You can see that we've had bases, we've had tops, we've had all kinds of things around there, and that's also coming in here at the daily Bollinger Band. So we're talking about $41,000 zone. That could be where the next higher low forms in. Now, what I am doing here is I am splitting hairs, to be honest with you. I mean, the momentum is continuing to go down. I'm not going to try and sell this to anybody that we're looking to break out. And again, you know, by pointing out those 3 trades that I've done over the last 3 months, for 3, 4, 5 months, I suppose, as far as spot trades are concerned, you know, that's been a relatively successful, you know, trio of trades, hasn't it? Really, 1 sell at higher than we are right now, 2 buys at lower than we are right now. That's all there is to it. It's not like I'm clicking buy and sell every single day here, despite making videos on this every single day. Spot trade is my preference. Futures trading comes when the time is right. So, what are we looking at on the 4 hourly? Well, it's not looking pretty good, I have to say. You know, heading towards a death cross, probably going to be completed this weekend if we follow on with this kind of trajectory. No real uptick over here on the MACD. Money flow index curling back up a little bit, as it would do, you know, after finding a low. What we've got here is a little bit of bullish divergence. It's not particularly strong at the moment, I have to say. Probably looking for another low to form on this one before any kind of significant bounce. That bounce could be a decent bounce. It could be the low that's formed in this series recently after the consolidation's broken of higher highs and higher lows. That could be the next sequence, you know, and that effectively will bring us down to between 40,000 to 41,000, you know, maintaining that higher low structure that we've established already. Again, we are splitting hairs here. I am kind of looking for this to come down a little bit further before going back up, but even if it were to do that, you know, is it a problem? No, it's not a problem. Not a problem at all. This, if it turns out to be an accumulation, which I think it is going to end up moving back up towards 50,000 on the next move up. So we've got to find our next low before our next tick back up. All we really need to do about that stage really is get above this next level here. So again, you can see the resistances, although on a horizontal, kind of appear the same. On a moving average basis, they're different. We didn't touch the 200 this time. We touched it this time. We surpassed it this time to the 200. That's simple. Next time we should break that and move up towards the 50 to 52,000. But for right this very moment in time, kind of looking for that $41,000 zone to get tagged. And all of this, if it were to happen over the weekend, especially today for instance, would maintain the Ichimoku Clouds conversion baseline signal, suggesting that the uptrend is still in play. This is a buy signal that's generated more or less on this around this candle body. So we got the cross took place here, which meant that the price action was here, which is just a little higher than where we are right now. So I'm actually in favour of this to continue to go up, to be honest with you. Cancelling this signal would be this cheeky span touching price action, and that would mean a closure. You know, we can sustain lower today, but a closure tomorrow or Monday of 41,000. You'd have to close within that price action, and that would kind of cancel out this signal and say, all right, it's not relevant anymore, or it's a lot less relevant than it was before. If we got the blue across the red, it could be completely irrelevant. But for so far, it's actually still in play. But you know, as we all can see, you know, whether it's by price action or momentum, it's all looking a little droopy right now. So I am actually looking for that retest of a little lower, about $41,000-ish zone, and that could be where we find our next level of higher low structure formed on this kind of diagonal, and that's kind of what we're looking for, really. That's what we're looking for. You know, I'm looking for this kind of to hold. This comes in at 40,000, 39,000, so we could get, you know, liquidation wicks down below there. Then we could have a nice full-on big bounce up all the way to the moon, which is what people want to hear about. Not everyone, actually. There's a lot of perma bears on here going, "You're wrong, man. You're wrong. Despite your trades being successful with this sell higher and these two buys that are lower, you're wrong." Well, yeah, that remains to be seen. And if it were to be the case, let me remind you of a nice little saying that's heard quite often in traditional markets, which is timing the market is not as relevant as time in the market. Now, I said it on my Telegram group the other day, and that's true. It's not true for all altcoins. We all know that altcoins can be pretty deadly, and you know, dabble with them at your own risk. And yeah, I've said for a while now that we're not in any kind of alt season, that they're all just following Bitcoin, which is why I warned on that video a few days ago that if we lost some of these zones, altcoins get completely demolished. They're not ready. They're not ripe. Although some of their prices down here are particularly mouth-watering lows. Very, very happy to pick some of them up at some of these levels, but we're not looking for anything major. But for Bitcoin and probably even Ethereum, to be honest with you, time in the market trumps timing the market. All right, so just remember that. If you look at certain things like, you know, Visa or Apple or Microsoft or, you know, Amazon or whatever, or Bitcoin, there's one thing that is certainly true, which is time in the market appears to be one of the best things you can do, and that would be what Michael Saylor would probably agree with when he says the best time to buy Bitcoin is always 5 years ago, and that would remain to be the case indefinitely. So look, let's leave it with you there. That's a nice little philosophical note to be left on. Look, there's no getting away from it. Momentum's down. But there's also no escaping the fact that while being in what looks like an accumulation, we are making higher highs and higher lows, and we should allow that to continue. Time in the market. Don't try and time the market. Don't get beaten up about trying to catch it to the dollar. It's kind of going to be irrelevant over time. We all know this, right? It's going to be irrelevant over time. We'll look back at the trolls and go, oh man, you bought 40,600 and I saw it work down to 39,000, which means that only one of your two buy orders were relevant out that day that I made that comment. Well, yeah, well, maybe that is going to be the case. So be it. Time in the market, my friend, will trump time in the market. Right, there you go. Right, let me get back into the mayhem of what's going on downstairs, and I wish you a good day and take it easy.
Pas en pite.